Hey everybody, this is David Hockman, the CEO and founder of QuantGoal.com, doing our very first introductory video about who we are, what we do, and how we act and operate here in these kind of markets where we're seeing a tremendous amount of chop every single day. And I'll pull up the current chart. This is the hourly chart for the S&P 500 E-mini futures. You can see right now we are still trading in a short-term uptrend on the hourly here, but if I'm going to look at this from a QuantGoal perspective, I'm going to want to quantify it and see what are the probabilities that the S&P 500 is going to move up, down, or sideways from here at any given point in time, and into what levels. Like, are we going to trade at and above, for instance, 4,200 on the S&P 500 E-mini futures in the near term? Near term for me is 10 days and under. And how do we quantify that? How do we attach a statistical probability to these kind of moves that we think that we're going to potentially see in the stock market, right? Because we hit this resistance level around 4150. You can see it happened yesterday and on Friday. This is Friday's chart on the 29th of July. The high was 4144, and then Monday it was 4147. So we're trying to hit that 4150 level. We're not able to hit that 4150 level yet. However, looking at the percentage moves in the moving averages, looking at the amount of time that this asset class here, which is the E-mini futures, has spent at and under its 200-day SMA, and by what percentage, all of these things correlate to standards of value. And that's fundamentally what I want to talk to you guys today about regarding QuantGoal, because it's great that we can consistently bring trades like this one, which was in Ford, which was 173% gainer. This one in Snapchat, 230%. This one down here in DocuSign, 971%. It's great that we can consistently bring 100% plus options trades to you. It's also just as important to understand, how do we bring those trades about? How do we actually understand and quantify those trades? And how can we do that specifically and consistently for you? And that's kind of what we're going to talk about and go deeper into today, because ultimately what we have to do is understand and then define the standards of value that are working in the stock market at any given point in time. That's kind of what we're going to go into further from here. I'm looking at the QuantGoal website. This is our website right now. You can check it out at QuantGoal.com. The biggest portion of the site that we're working on is updating our trade sentiment to you every single day about what's going on. So today, August 2nd, I updated the trade that we have on in Coinbase, ticker symbol COIN. And you can see we did a nice write-up about it. And we're looking at a short-term resistance level, and we're looking at a short-term support level at and through earnings. So the trade that we're looking at is going to capture the premiums and the premium price discrepancy that, as we see it, based on how we quantify the stock market, how we quantify the fundamentals of the stock and the fundamentals of the industry that Coinbase operates in, tech, crypto, etc., and rolling that up and into the macroeconomic reality that everyone operates in right now, in addition to the geopolitical environment. And it's obviously the law is what sets the form of the macroeconomic environment to which all stocks operate in. Therefore, quantifying the geopolitical realm is going to be the most important, and assigning values to that realm, assigning quantitative values, quantitative states to the geopolitical reality that we all operate and live in. What is the geopolitical reality? Well, it's things like, the laws that dictate, how basically corporations, companies act, right? And the laws and the policies, like Glass-Steagall, like the Volcker Rule, like being too big to fail, all of these things matter. Why? Because they set the tone to quantitative easing, quantitative tightening, to what's going on. Are we in a recessionary environment? Are we in a expansionary environment of the economy, or a contractionary environment to the economy? All of these things are fundamentally dictated and really guided by, steered by different laws and different policies. Therefore, we can take a holistic approach at QuantGoal in quantifying those values as they pertain to the law, because they will obviously set the tone to a risk on, risk off move in the stock market, and that's going to affect obviously individual stocks as well. So we assign values at the geopolitical realm first. That's again the law, right? What is the form that the macroeconomic reality operates in? And then we can quantify that macroeconomic reality in different ways. For example, we can look at the interest rates, Fed fund rates, mortgage rates, different economic activity, the inflation rate, PMI, CPI. We can look at the unemployment rate. We can look at M1, M2. All these things we quantify, we set standards of value to then dictate, okay, what kind of a state are we in, and how does this state affect the specific industry, sector, and stock that we're looking at. This is fundamental to the QuantGoal approach. Okay, let's dive into it a little more and let's see how we actually look at this. So we posted this on Coinbase this morning, seeing short-term resistance on the stock around 83.82. So I'm going to be pulling up the chart on Coinbase next. Let's take a deeper look into Coinbase here. And these values that we're looking at when I wrote this, it was trading around 62.5, 63. It's at 65.5 now. So I want to take a little bit of a closer look here on the stock. Let's look at the 5-minute. You can see it had this kind of short-term range, and that range was around 60 on the low end, went all the way down to 59.37. And then all the way on the high end, it was trading around 64, 64.25, 64.30. Okay, and it's been trading in that chop range really since last Thursday, and we're seeing it break out of that range today. So this is kind of like, that's the technical analysis, right? That's the technical standpoint that most people look at. That's easy to understand. But how do we actually quantify that reality so that we can have a statistical probability and a statistical edge? Because we have PhD statisticians here working at QuantGoal, not myself, but others, that can put a percentage value as to what is the probability that Coinbase stock will continue to make this move at and above this range from here, and what is the target price that Coinbase will reach in this move based on certain parameters that it's hitting, every single day. And that's really the important thing that we want to look at. Why is that the most important thing we want to look at? Well, it's because it all leads to a trade, right? And what kind of trade we want to look at. So we were writing this morning that we see short-term resistance around that 83, 82 level in Coinbase. And I'm going to point that on the daily chart right now. So 83, 82 is right at the top of this move. That was the high that it made back on May 31st. So let's take a closer look into this kind of short-term move here, because if we were to pull out, Coinbase has been down significantly. You can see that here. It's been down 85% since its IPO as to where it's trading at now. So that's kind of a huge range. We're not going to trade that kind of a range. We would have to put on leaps. We'd have to put on options trades that go out several months, 6 months or more. Right now we're looking at an options trade that is 45 days away from where we are at right now, currently trading on the stock. So we're looking at the September contracts, and we're looking at to see, at and through earnings, which are next Tuesday, 8-9 after the bell, what's the best trade that we can put on to take advantage of any price volatility in Coinbase stock that we believe is going to happen either up and to or at and through earnings. We want to look at both here, right? And we want to also be able to hedge our investment. We want to be able to hedge our capital here so that we can take advantage of price volatility on both the upside and the downside and still make money. And that's kind of our specialty, is being able to identify stocks that we believe are in the highest probability state to see price volatility, significant moves to the upside or downside. I'm talking about 25% plus upside move, downside move in the short term, under 55 days, that we could take advantage of, and we've identified Coinbase as one right here. So therefore, we're looking at these short-term levels. We're looking at resistance around 83, 82, and then support around 50, 34. Let's take a look at the support move here on the stock. That's like this low that it had made, started to make it here back on the 13th of June, and then again at the end of June, kind of touched it, and then in mid-July, we saw the stock kind of basing here, tried to test it, didn't get that low, and then it's been moving up slightly ever since. And what's interesting here to us is the price action and percentage moves that are happening on a daily basis in those 20 and 50-day moving averages as they correlate to that 200 SMA, which is almost triple away from where the stock is trading right now. Stock's at 65.15. So, just call it break even 60. You call it 70. So it's either going to be 680 or 210 would be a triple away. So it's kind of right in between that at 177 on the 200-day SMA. And it's trading at a very big percentage gap between that. In addition to the stock had a nice gap around $100 a share to where it's kind of just been trending sideways in this move since all the way back in the beginning of May. And so those are the two levels. We're looking at that short-term resistance at around 83.82, and then the short-term support here, we're looking at it at around 44.15. Really, we're looking at it at around 50.40 from here. So therefore, what kind of trades, what's the probability that we're going to see certain price action in the short term? So if we measure these moves, right, that range from 50.34 on the low end to 83.82 on the high end, that's a 65% upside from 50 to 83, and it's a 39% downside from 83 to 50.34 respectively. And so if we split the difference between the two, that's a net 52.29% difference on average between those two levels. Therefore, we're looking at the premiums based on kind of that standard of value, that 52.29% standard of value, volatility value that we've quantified here based upon where coin stock is trading. So we know that since the IPO, the stock has just been an absolute down move here, down 85% since that IPO, which was only last April, right? Last April 14th. And we want to look at what we can do and kind of see what the stock has done, see what the market has done, see what's going on in that geopolitical, macroeconomic, and fundamental realm so that we can get a better understanding of what is the likelihood that we're actually going to see big price volatility in the stock to the upside or downside. And we go into that. So if you want to check out, this is the blog post that we did on Coin. It's also posted on the QuantGoal Twitter, which I'll pull up for you guys real quick right now so you can see that. The QuantGoal Twitter is here. It's a great resource for everybody that wants to check us out. It's at DaveA299 for now. That's me, David Hochman, CEO and founder of QuantGoal. Check us out there. And we go into, for premium subscribers here, if you were to click this, just fill out this form, send us a quick note, and we'll shoot you a message back. We'll get you set up so that you can actually see, what the trade is that we're looking at. But we're looking at a call, and we're looking at a short, a put on the stock on Coinbase here that will give us an entry where we can get an exit target at or above 5 and still get a net 100% return. So we're looking at an entry on this that is at and below 250 for both. So that's a combination of both sides. So if we were to look at, for example, let's look at the front month contract for Coin. Again, we're not going into that front month contract, and I'm going to pull this up here so you guys can see it along with me, and so that it makes sense for everyone as we go through this here, and you can understand what we're looking at and why we're looking at it. So here's what we're looking at here. This is the front month contract for Coinbase stock, and we're looking at a trade where we can capture enough premium. Again, certain percentages to the upside and downside, and if you become a subscriber, you will get access to all of these values right away. And believe me, it's going to help a lot in understanding what we're doing. And many people, as you can see, we have testimonials on the QuantGoal website as well, have had a lot of success with these trades, specifically the strangles, which is where you're buying a call and you're buying a put on the same stock, same expiration, different strike prices, trying to capture different catalysts, trying to capture the state of volatility in a stock to be able to capture the most premium. And that's really what we've been able to do here. That's kind of like our bread and butter, is finding situational setups in different stocks where we can put them on and confidently say that we're going to see a high probability of a 100% or more move, and that's net. So that means we're looking at calls, we're looking at puts on the same stock. Like I said, just different strike prices. We're all in, for example, on this one. These are not the actual values, but here's an example. All in, we're at and below 250. So on this short-term contract, we'd have to look at it, probably around, let's just say $1.25, so the 45 puts, and we'd have to go all the way up to, the 80s or 90s even for the stock. So that's $1.43 and $1.20. That's like $1.65. I'm sorry, it's $2.65. So that is a huge move in 17 days. That's not what we're looking at. We're looking at a move going out 45 days from here in Coinbase stock. That is significant enough for us to take a shot at this and still be able to come in on both sides at around $1.25, $1.50 each, so that we can still get that 100% target at or above 5. And that's significant because if you look at this short-term, the front month contract rather, where are the premiums currently, right? 17 days away in the money premiums. I always like to go if it's $1 above, $1 below. So the short-term premiums on Coinbase for right near the money are going to be 730 and 775 respectively. So I believe it's a very fair assessment for us to target 5 and above going out 45 days, even though we're giving these 50% or more, much more in one of the trades here, going out that time frame, and we're still going to have a high probability of being able to capture that premium. Now, Coinbase is going to report next Tuesday, therefore this is the options contract that's going to be at and through earnings here. You can see some big open interest at 50, 55, 60, kind of like different standards here, 65. Nothing really out of the ordinary. You'll notice on the call side, you're not seeing nearly as much call side open interest for Coinbase going at and through earnings. Okay, that just tells you, for the short term, the sentiment options wise here is going to be a little more bearish than bullish. We quantify that as well. You become a subscriber, get access, you get all access to this information. But really, if you were going to put a strangle on just going out and through earnings, it would be extremely difficult because of the way price premiums are correlated to the different strike prices. And being that as it may, that's why that is not as a compelling setup, and that's why we're going at and through the September contract, which we outline here. So when you become a subscriber, you get all access to this information. So be sure to check out QuantGoal.com. Give us a shout, QuantGoal.com/contact. Just fill out a couple questions. Shoot us your email. We'll definitely get in touch with you quickly, and we'll get you set up. That's it for QuantGoal today. Check us out in the near term. Take care.